Hello, hello, hello. What's going on, everybody? It is episode 75 of The Home Front. How are you guys doing tonight? Make sure you let me know that you're on so I can say hello. We are going to have Carlito on this evening as a guest. He is going to answer all of our questions about FHA loans, so be sure to have your questions ready. Okay, let's see. He says he's here. I don't see him. Let's see. I don't see you, Carlito. Waiting for you to join so I can invite you. Ah, there we go. But I don't know what you're on. It's not letting me invite you. Cannot invite as a... Are you on your cell? Gotta get on your cell so I can invite you on. Hello, how are you, Mo? What's going on this evening? You have your FHA questions ready? Hey, Dion, what's going on? What are you guys up to tonight? It's not letting me invite you, Carlito. It's telling me I can't invite you as a guest to join the live video. Are you on your cell? Hey, Michael, what's going on? Okay, I'll hold on. What do you guys got going on this evening? I don't want to burn my food. He is getting on his cell phone, and I'm readjusting over here. Just give him a few minutes to take care of that. Like I said, we're going to talk about FHA loans this evening. Every loan officer has a different specialty loan. Most of them have FHA loans, but we're going to basically go over, as a new homeowner or a new home purchaser, some of the questions that you guys might want to know the answers to. They look at a lot of different things when they first pre-qualify you, and I'm going to ask him some of those questions. So get ready, get your questions ready for anybody that's thinking about purchasing a home and you want to use an FHA loan. Hey, Tracy, what's going on? Thank you for joining this evening. How are you doing, Michael? What do you guys have going on this evening? Real estate market is hot. I mean, I'm really, really busy. So I have, I think, 5. No, Carlito, I can invite you, but it's not, you're not, are you on your mobile device? No, that's not. You have to join the video, and then I will invite you as a guest. Hey, Valentine, what's going on? How are you doing this evening? Okay. Did you join on your phone, Carlito? Because I hadn't seen you yet. Or I don't see the ability to invite you yet on your phone. What crazy stories do you have for us today, Valentine? I haven't heard any of your crazy stories lately. Be sure to share this out. Let everyone know. You never know who's going to be using an FHA loan, so you definitely want to help them out. I come to you guys every evening during the weekday and give you a little bit of real estate information. I actually had an incident today where we had to switch loan types. We're under contract, and we switched loan types because, some of the qualifications for that loan type didn't fit for the county. So, for example, if you qualify for a certain loan, it may only work in certain counties, which I didn't know. For the USDA loan, you can only make a certain amount of money, and that changes depending on the county that you're in. So I learned something new and interesting today. But fortunately, we were able to save the deal because we switched loan types, and my clients were able to do it. You may not always be able to qualify for a different type of loan. Okay, Carlito's having some technical difficulties, so we will just continue with this chat about loan types, and then maybe you can get your phone. Let me know if you get that worked out. Hey, Michael Smith, what's going on? Oh. For anyone who is just watching for the first time, I'll tell you a little bit about the little boy that we are raising money for because he has cancer. He is one of 15 children that have this type of cancer. It's a very rare cancer in kids. It is usually hits people over the age of 55. We were able to raise, with the assistance of Michael Smith and friends, we were able to raise money to get him started on his treatment. Michael Smith, I'm happy to report to you that Michael has been on the treatment now for a couple weeks. He is not feeling pain. He's able to eat without getting sick. He's able to sleep well. And his mom said that his mood overall has changed. He is just happier and he's feeling a lot better, which I would assume, from eating right and getting good sleep, that your body is naturally recovering. So we're already seeing positive progress from his treatment. We have enough to get him through 2 months, and I'm working with a couple of my friends to try and put together a big event. I just want to let you know, Michael, and we will get you on board as well, because I want to put together a big event in the area, do a Facebook Live, kind of like a telethon, see how much money we can raise. I want it to be huge. So a friend of mine offered to bounce some ideas off me, and she's going to help. So love to get your ideas and chat with you about it as well once I talk with her, because I want it to be big. So it is really great news. It really makes me feel, sorry about that, it really makes my heart feel full to know that we're helping someone in our community improve his quality of life and hopefully recover. So hopefully Carlito is able to jump on. If not, we'll just go improv. Anybody else want to join? Michael Smith, would you like to join? I don't think I can invite you. Can't invite you as a guest. Valentine, can I invite you? Oh, we've got Carlito. Yay. Let's see. I can finally invite him. Let's see if this works. Inviting. Get to talk about FHA loans. You got to accept the invitation, Carlito. I cut myself. I was cooking. We'll see if this works. Giving it a minute for him to jump on. But yeah, if you guys have any questions about the real estate market, it's really, really busy. I was talking about I have about 5 under contract right now. I have a listing and I actually need to do that. I had to prepare the addendum to do a reposition of them on the market for one of my listings. I'm a little drowned out with this light here tonight. Reposition my face. And then what else? We have another listing we're getting ready to come on the market here in a couple weeks. We are doing a huge renovation. We're going to clean it out, get it ready, prep it. It says no answer, Carlito. Let's try it again. Huge preparation. You have to turn your phone sideways, Carlito, and then you can accept it. Turn it like this instead of, I don't even know the terms. Instead of vertical, you need to turn it horizontal, and then you can accept the invitation, hopefully. But yeah, there's a lot going on, and it takes a lot of work to get a house ready for the market. And hey, finally, we got you on here.
Hi, how
How are
are you?
you? Good.
Finally, sorry about that.
Yes.
I have 2 phones and the other one wasn't working, so I had to improvise and use my work phone. So it's
No
fine, I
worries.
guess.
Yes.
How are you?
Good. Real quick, I just want to respond to Michael Smith. Definitely will keep you posted. I want to get you guys involved. Anybody who would like to participate in the Michael Oliver campaign we are working on to try and help our friend with improved quality of life and treatment of his cancer, please private message me, or I always share his story on my page, so please share it out at least. So, how are you this evening?
Well, as you know, the reason why we scheduled this for 9:30 is because I have 2 kids
Mm-hmm.
and they're going to sleep pretty late. It's summer break.
Yeah.
So, I let them stay up a little bit later and well, that's the why. So just getting time to sit down after working. As you know, it gets crazy also for loan officers as it is for realtors.
Oh yeah, we work hand in hand basically, because if we don't have you guys, we can't write offers.
Exactly, exactly. So there is really no 7-day I mean, 5 day a week jobs. You know, you work pretty much whenever you're called. You know, I have realtors that call me on a Sunday night. You know, in the middle of lunch or dinner.
Well,
That's exactly
kudos
what
to
you have.
you for being accessible because some of them are not accessible and they're just, I guess they're performing on that level where they don't need to be accessible. I'm going to switch positions because I look so drowned out. The whiteness is showing through.
Yeah, I'm actually in a separate room in my house where I usually it's like a mini home office where, you know, it's kind of like a quiet room for me when my kids are like halfway asleep and halfway awake.
Yeah.
So, you know, so this is where I am right now.
Okay. Well, I'm trying to adjust the lighting in my house because it's funny. I know exactly which lights will work. So it's not too bright, but it'll give me enough light so I'm not completely dark. But
But you know what?
so
Speaking of accessibility, you'll be surprised. I mean, down here in the Miami or South Florida market, a lot of realtors actually are not the ones that are not available on the weekends. But that's because it's a very unique market, you know.
yeah.
A lot of them are doing so good that they go away for 3 day weekends. Sometimes they go to the Bahamas
Wow.
because it's right.
That's true.
Yeah, you know, the whole the islands is accessible to anybody here. So it only takes like 45 minutes to get to the Bahamas or Jamaica, any places. So
Well, it must be
so
nice.
on the weekends, yeah, exactly. But you know, as long as you have Wi-Fi, you can do it from anywhere.
Oh yeah, I mean you're completely remote. The only thing we have to do is we have to be accessible to show houses. But if we have listings, we can sell a listing in the Bahamas and I'm good to go. I can work from the beach. So
Exactly,
and you guys
exactly. I
can too.
wish.
You don't need to be person to person anymore. Everything is done, making a phone call, sending an email, text message. That's how I do most of my business with my loan officers. And there's one loan officer I work with, I've never even met her in person. And I send a
Oh,
lot of
really?
business her way. Yeah.
I actually have a few of those too since I lend out of state. A lot of
Mm-hmm.
loan officers tend to just be within their state or their area. But luckily I can work, you know, Virginia, which is where you are. I can do
Mm-hmm.
California, Florida. So, you know, but the thing is that a lot of people don't feel comfortable, I should say, you know, discussing financial stuff or even showing you stuff, you know, if you're not in front of them, you know, so it makes
Mm-hmm.
it difficult. So if you have to pre-approve somebody on a Sunday and they say, hey, you know, I don't want to do things over the phone, can I come meet you? Do you want to meet somewhere? And you know, it is what it is, you know, but it's not
Yeah,
all the time.
absolutely. Yeah. Well, I'll tell you that I have a preference to work with my preferred loan officers. Obviously, I know how they operate, so I'm a little nervous to go outside my comfort zone with someone that I don't work with, that normally work with, and two, in a different state, because it makes it a little bit difficult. At least, I don't know, because even like I said, I haven't even met one of them, and she works right up the street. It's not like I've ever been to her office, but
Wow.
just knowing how, like, for example, having an in-house underwriter and knowing that they have the communication like right there helps me, because if I'm dealing with a big bank that doesn't have in-house underwriting, it makes me a little bit nervous, and they have less um, what's the word I'm looking for, incentive to go get that loan
Mhm.
closed quickly. So
Exactly. It's true. It's
so we're
true. I
gonna
mean, I'm sorry,
go
go
ahead.
ahead.
Go ahead.
Let's say I work for a direct lender. I worked for a big bank before, where it is like that, where their underwriting or their support group is in a different state.
Yeah.
So the way they work is a little bit different, and the whole underwriting process is still a little bit different. With a lender, their specialty, that's all they do is mortgages. So they have a huge incentive to close as soon as possible, to underwrite loans. They measure their performance a little bit different than banks.
Yeah.
So
Well,
yeah,
let's
definitely.
see. So you said you're in Florida, Virginia, and California. Are there any other states that you lend in?
Let's see, Kansas. Mostly, well, what I like to do is I work with states that I'm familiar with, that I have either family or relatives or friends. So it would be like New Jersey. For California, I do because it's a lot of business over there. It's a hot market over there, and
Yeah.
Texas, and most of the Northeast. Like I have family in Pennsylvania, Massachusetts. I'm originally from New York, so
Oh, okay.
um, that also helps as well. And plus, my
Okay.
sister's a realtor.
Okay. Um, So then my next question, we were going to talk about FHA loans. So I'm a
Yes.
new home buyer and I come to you. What is the first thing you're going to tell me to do?
Well, first off, I just want to clarify that FHA is not really for first-time home buyers. I mean,
Mm-hmm.
it could be, I mean, you could have owned the property about 3 years ago. You can still qualify for FHA. So a lot of people tend to think, okay, well, I already owned a home before, or I bought a house for an FHA last year. I may not qualify for another one ever again, which,
Right.
is not true. Um, but FHA more or less it's been open for a long time. It's a government program that allows people to buy a house in different situations. For example, you could have not so good credit, but you can have down payment. You can have the money to put towards down payment. So the fact that your credit you could be at a 600 or a 620 or a 580, and you may not qualify for your regular traditional loan, but FHA allows for you to still have a low credit score and still qualify for a mortgage. Or it could be the other way around. You could also have just a little bit of money saved, but you could have excellent credit. Or you could be both. You could have both a little bit of money and a little bit of credit, but you can still qualify for an FHA loan. So it,
Right.
it facilitates, the home purchase, making that dream come true.
Absolutely. But I know you are a lender that can go down a little bit lower than some of the other ones because
Yeah.
most of them that I have dealt with need a 620 credit score. But I know you said you can go down to a 580.
Actually, 550 just recently went down.
Wow. When did that go
But those
down?
550s would require a bigger down payment. So they wouldn't really go
Okay.
up with the whole 3.5%, in essence, you would need a 580 to keep it with
Mm-hmm.
the whole FHA standard.
Okay.
You will need a 3.5% down payment, and but you can go as low as 550 if need be. You
Okay.
just
Well,
need to
that's
come up with a bigger
interesting.
down payment.
Yeah, it's going to be
Right.
one or the other. I mean, if you have some dings on your credit, obviously you need some more money. And your percentage, your interest is probably going to be a little bit higher too, right?
Yes. Okay. So it's all based upon risk. And granted, an FHA loan, it's going to have insurance. It's going to be PMI or MIP, what's considered mortgage insurance premium. So what
Mm-hmm.
that means is that your loan will be insured up to a certain amount of money. And in essence, it's more or less to benefit the lender or the bank rather than to benefit the borrower. But all the same, it does facilitate the
Right.
lending process. And the one time or the few times where you would see a higher interest rate or pricing, as we call it in the industry, it would be whenever there is a
Mm-hmm.
down payment assistance program. So I know you had asked me, once I think in regards to a down payment assistance. And for example, we have a
Mm-hmm.
fund, nonprofit that allows or gives a credit of up to $7,500 towards closing costs or down payment assistance. But those programs, a lot of times, would require a pricing or a rate that would be slightly higher than normal. So if you will
Right.
qualify for a 4.6, you would normally get like an extra point or a point and a half. So the price will be higher, but at least you're getting $7,500 towards closing costs or down payment assistance.
Absolutely. Well, like in Virginia, we have the VHDA, and I don't know if you know anything about it, but that's a grant. They give them like I think 3.5% grant money. The requirement is that they
Mhm.
live in the house for so many years. I think maybe three. But I have
Really?
it. Yeah, I think they have to live in the house for 3 years. I'm not 100% on that, on the number of years. But they give them that money towards their down payment. They're only financing 97.5%, so therefore they're getting that 3.5% down, and then they get essentially they're buying the house for less money because they don't have to
Yeah.
pay that back. So that's a really good grant program that we have. And then I don't understand. It is an FHA product, but it's specific to Virginia. And I know that there's another product that does the same thing, and I think it's a conventional. I'm not a loan officer. I'm just going off vague memories of all these different types that have been run by me. But I think there's a conventional grant program as well. I don't know for sure.
Mhm.
I'd have to ask the loan officer, but I think she said that there's a conventional grant program as well that essentially does the same thing, and which means your overlays have to be different, and your overlays are your credit scores and your debt to income ratios.
Right. Sometimes you need like extra money in reserves, for an
Mm-hmm.
extra amount of. So it's different. Each state and even some counties are a little bit different. So I called somebody in Virginia so they can give me the information about a specific county, and they told me, well, that particular grant was not funded this year, so we no longer have those monies available.
Mm-hmm.
They said hopefully next year, or maybe you may try a different fund or a different program. So it all depends. Each state or even the counties are a little bit different. But most like in Florida, we have a fund that's nonprofit. It works with the FHA, and then
Mm-hmm.
we have something that works for conventional. But funds that normally, at least in Florida, that are for conventional loans, they take a little bit longer to fund. For example, you could be
Okay.
waiting 60 days until they
Oh,
release the
wow.
money. Whereas if we go with the fund that I'm usually used to working with, in 30 days or 45 days, it funds at the same time that you're closing your loan. You don't have to wait till you get approval, and then the process,
Yeah.
it works.
Well, there's so many different loan programs that it's not, a lot of people don't realize or understand that there's so many different things that go into getting pre-approved and pre-qualified for a loan. And it really isn't just a cookie cutter answer because a lot of people are like, oh, well, my credit score is this. It's like, but there's so many more things that go into it than that. And you can't just think that it's one thing because everything could look good and then your debt to income ratios are off. And then that'll throw the whole thing off. So you really, it's the whole package together. And there's a lot of things that can be justified in a letter, I've learned as well. So,
Yes,
so
yes.
even if you
Nowadays.
have dings, and sometimes it's just easier to get qualified for a loan than get people in a rental anymore. It feels like anyway.
Yeah, we have an
Because,
underwriter, and the underwriter tells us pretty much when you're put together the paperwork is what does the paperwork tell? Like what does the story tell? For
mm-hmm,
example, if you had a thing or if you had a foreclosure, you had a bankruptcy, as long as you're able to tell what happened and that it's not going to happen again, then
mm-hmm,
then you should be
exactly.
good. So it's all about the story that you tell.
And that's what I tell people, when you're writing these explanations, because when I'm trying to get someone in a rental, sometimes you have dings on your credit. And they in rentals, they're more harsh on that stuff. They're just like it's plain and simple, no or yes. If you have a low credit score, sometimes they're just like, nope, I don't want to hear it. So I tried to tell them, if you have it, let's just write a letter explaining the situation. Maybe if you have some savings or you have a cosigner or something that I'm trying to get you in until we can get you into the position where you can purchase. So, and
One thing that I would say, I'm sorry,
mm-hmm.
one thing that I will say is, if anybody's never bought a home before, um, it's tough whenever somebody doesn't tell you everything up front. And I would say that's like the biggest thing, is like, okay, you didn't tell me you got divorced last year, or
Right.
you didn't tell me about the IRS tax lien or taxes that you owe,
Mm-hmm.
or that you borrow money against your 401k and now you're repaying it and it's being deducted from your pay stubs, so it
Yeah.
reduces the money that you're actually making. So if you're not telling the whole story, then and we find out in the middle of the contract, and then we can't lend you the money because you didn't tell the whole story, or you felt, like it was too intrusive to ask these questions. But in the end, it all comes out.
Yeah.
We're looking at your credit. We're looking if you owe any properties right now, or like people will say, no, yeah, it's my first time I'm buying, but really you have a home somewhere in a different state, and then we run a report that would say, hey, you have another house here, what's going on, and then people just think sometimes like, they're never gonna find out, but the lender usually does a good job about finding out. So I
I've
will
been
always
through a
say, just be
couple
honest.
deals where it's just like we had someone at one point submit taxes that they hadn't filed, and this was what they were going to
Yeah,
submit, but they didn't submit it, and
yeah.
then we found out literally like a week or two before closing. We tried absolutely everything. We could not get that deal to go through, and the point of the matter is, you may feel like it's intrusive, but these people are lending you several $100,000,
Exactly,
and
that's
they
exactly
have
what I
to
thought.
know that. Yeah, you're getting a lot of money, and it's a lot of risk for them. Be honest, because would you rather get a week from closing and get shut down, or would you rather find that out from the beginning? You're going to save money
True.
and energy. So being honest is the key, but some people just don't get, I just don't think they understand the definition of honesty and full disclosure sometimes.
Exactly. True. True. True.
So again, I'll go back to my question. What's the first thing? I know we have the definition of the first time home buyer. What's the waiting period that you can use that? So obviously if I sold my house last year, can I come back this year and get and use an FHA loan again, or do I have to wait some period of time?
No, I mean, if you sold a house and you satisfy already that loan, you can definitely get another FHA loan. There's no
Within a
problem.
year?
As a matter of fact, you can have two FHA loans active.
Oh wow, I didn't
You
know
know,
that. Mhm.
yeah. For example, if you have an FHA loan and you just took it out, you can wait another year. If something changes, but I mean, you
Mhm.
have to give a good reason why. If you've moved or you got divorced and the other person's getting the property and you need to buy another property, I mean, there has to be a reason why you're getting another FHA loan. But for the most part, and just to keep it simple so it's not too complicated, yes, just one, that's it. But there's, as you said, there's different situations, different scenarios, but you can definitely get another FHA loan. But you just got to explain to your loan officer why you're applying for another FHA loan.
Well, I was under the impression that you had to wait at least 3 years. Oh, real quick, I want to say hey to Joe Carlisle. He's in Florida, Carlito. He's a good contact that you might want to connect with. And Eric Weaver, he's out of Pennsylvania. He's another one who is getting his real estate license.
Oh, wow,
So,
nice.
yeah. And then what's going on, David? Thank you for joining. But back to what you were saying about I had there, maybe this is a myth. Maybe you can shut this down this evening. Why did I think that you had to wait 3 years to get another loan, FHA loan?
Well, there's two things here. There's FHA loan and there's what's considered a first-time home buyer. So,
Okay.
like for example, if you wanna qualify for down payment assistance, a lot of these down payment assistance programs are geared towards first-time home buyers. But
Okay.
first-time home buyers in our industry, it's like you said, 3 years.
Mhm.
Um, so that's pretty much what it means. Well, what FHA is not necessarily for first-time home buyers. I mean, like I said, you can have two FHA loans and you can still get another one, but it depends on the situation or the scenario. So you can't say, well, I had an FHA loan and then I have to wait another 3 years. You can have it right. You just have to wait like another year if you want to qualify for another one. But that's in
Okay.
essence how.
Good stuff. Good stuff. Does anyone from our audience have any questions for Mr. Carlito this evening? He is a loan officer out of Florida, and we are talking about FHA loans. He said he lends in Virginia, California. Let's see if I pass this quiz. Texas, Kansas, New York, most of the East Coast, you said. What did I miss?
Right. I actually have a map on my business because I have so many states I don't even know. But the ones that I like to work at are the ones that I'm familiar with and the ones. But looking at my map, it looks like it's the whole West Coast,
Oh, wow. I missed
most
the
of
whole
the
West
southern
Coast.
states. Like I'm looking at California,
So you
Nevada,
probably work
Arizona,
with,
Texas.
there's probably less states that you don't work with than you do.
It's pretty much even looking at the map. Like all of the southeast, it looks like Florida, Georgia. Then we have central, like Texas. It's just everywhere. I mean, usually people just send me a message and they ask me if I'm lending in that state, and I just look at the map and be like, hey, yes or no, and that's all.
Well, you are a good contact to have because going down to 580 and 550 is definitely a good thing. Joe said, don't you have to live in the home for 3 years as a resident to get an FHA? See, that's what I thought too. I thought you had to live in the home for a certain period of time before you could get as a resident. I know you have to live in the home for at least 1 year.
Well, for at least 1 year, exactly.
Yeah.
Not, the whole 3 years thing, no. I mean, you have to live in the property first of all because that's your intent. The intent
Mm-hmm.
is to facilitate for you to live in the house and get a mortgage and to help you out. That's pretty much what it is.
Yeah.
And like I said, you can get another FHA loan afterwards, but in a special situation, a special circumstance. The whole 3 years thing, no, that's not how it works.
It used to, maybe it used to be like that. Maybe there was a longer waiting period between getting an FHA loan, but I don't know what that myth was. But I know it's definitely you have to certify that you're going to live in it as your primary residence at least for 1 year. The same thing goes with like a VA loan. You have to certify that you're going to live in there as your primary residence. Because I
For at
had
least
someone
1 year,
asking me,
exactly.
yeah, it was definitely 1 year because I had someone ask me, well, who watches that? Like, I know what her intent was behind asking me that. Well, who watches that? And it's like, it's
So
based
many
on the
reports.
honor system, but you really don't want to get caught, frauding a loan type.
Yeah,
So,
there are
yeah.
so many reports out there when we run audits, even after you close the loan, there's audits on top of that. I mean, there's ways, but just to keep it simple, just be honest and,
Hmm.
don't try to, trick the system because eventually, just keep it honest. That's all.
Yeah, absolutely. Well, Joe, his name is Carlito. He is a friend of mine, and we will have him. We'll tag him. He's actually tagged in the video, so definitely friend him. He said the same thing. 580 credit score is amazing. Yes, he's definitely a good contact to have. He has a lot of different resources that I know a lot of loan officers don't have, especially in my area. So,
Yeah, and
now,
whenever you're shopping around for a lender, you always wanna, ask a lot of questions. Different lenders
definitely.
have different programs, different specialty programs, especially special niches. For
Hmm.
example, there's other lenders, other companies down here in Florida that may do something that I can't do, and
Yeah.
I can do something that they can't do. So whenever it comes to even particular Fannie Mae or conventional program, or sometimes even an FHA program, I don't know, somebody may be able to do something where they may do an exception for them. So, don't think that all lenders or that all banks offer the same products because some of them are very unique.
Oh, yeah,
So
absolutely.
find somebody that's an FHA for, I don't know, 530 credit score or no money down,
I think we're pushing the
So I
limits
don't
now
know.
with credit score, though.
Well, it's getting crazy because now they're gonna uh, I should say loosen up some of the rules when it
That
comes to
doesn't
lending, and
surprise
it's
me. They went
yeah.
so
So
opposite of what it was before. I mean, it was so tough. Like, I'll tell you the truth, when I purchased my house, they were all the way to the other side of the extreme where I'm like, they want everything from me but a blood sample. And it was driving me
pretty much,
crazy. I was coming home crying like, this can't, please let this be over. It's really tough, and I think they've even loosened up since I purchased my house in 2013. So seeing some of these things change now, it's good in a way because it's opening it up for more people to go by, but at the same time they got to be cautious of just opening it wide up because you don't want to get back to the other extreme where it was.
yeah. And the thing is that the lending guidelines are like forever changing. I
Yeah.
mean, one day you can't do stated income, and the next day you can. Some like those are coming back. Those are actually back. I mean, those are harder to qualify for, or those are, usually come with a higher interest rate. But, the no income or the stated
Hmm.
income programs, they're out there now. So it's
Yeah.
forever changing now. For example, in the South Florida market, we have a lot of condos, and there's been a lot of restriction, especially with FHA, to lend on those condos. So it's almost impossible to do an FHA loan on a condo building down here. But
Oh,
now some
wow.
of the rules they're talking about changing some of those rules, and so that it makes these condos more accessible. So the rules are always changing, and from what I hear, they're gonna keep being loosened up a little bit more. And it's just like anything, you can either use it the right way or you can abuse it. But FHA is still the most
Exactly.
popular product out there. FHA, it helps you with obtaining the dream home or your first time house or your
Hmm.
home. But it actually helps a lot too with investors. Not in the sense that you're gonna buy it as an investment property, but the one that I like to do a lot, and I work with a realtor down here in Florida who likes to specialize in these investment properties, such as a duplex or a triplex or fourplexes,
Hmm.
where a lot of people don't think that you're gonna qualify for an FHA loan, but you actually can. It actually even helps you more because if the units are already rented out, you can use a percentage of the money toward your qualifying income.
That's
And
great
FHA,
information.
another thing with FHA is that if you're buying a single family house, depending on the county, there is a certain loan limit that they're looking to insure, or that the purchase price needs to be.
Hmm.
For example, in let's
You froze up on me. Give him a second. Is anybody else? Is it frozen for anybody else? Is it just Carlito? Maybe he's getting a phone call. Hit the likes button if it's frozen for you guys too. Oh, he disappeared. Oh man. All right, well, hopefully maybe he'll jump back on. If not, I appreciate you guys. Thank you, David, for jumping on. If you have any more questions, I know I hate it. I hate it when that happens. It's I think either a signal. I got kicked off one night. I don't know why that is. How are you doing, Joe? I hope everything is going well for you down there in Florida. I'm still here. I'm always here. I'm not going anywhere. I still have to eat dinner. I have another call to get on. I hope I didn't miss that one. So I really appreciate you guys supporting me. And I hope everything that I'm bringing to you is value. So please share it out. Let me know if there's something that you guys would like to know about. I would love to get that information to you. And I guess I will see. Oh, Carlito's back. Let's see. Let's finish this conversation. Give him a second to jump back on here. But Joe, you definitely need to connect with him. He's a great resource to have. There we go. What happened? He's frozen
Hello.
again. I saw you were doing a seminar. Can you hear me? You're still
I can hear
frozen
you.
up.
Can you hear me?
Yeah, I can hear you okay, but you're not,
Good.
you're frozen, but we should be able to hear you okay.
Okay. I don't know
Hopefully.
how far or if I just kept talking, so I don't.
We were talking about loan limits in the counties. Weather's not good.
Okay.
Yeah, that
Yes.
might be it.
Yeah. So, for example, I think I stopped in different counties, and different counties have different loan limits. So
Mm-hmm.
you always want to double check, especially with even as being a realtor. Sometimes you may feel like if you have a listing in a particular county and you think that house may qualify for an FHA, you got to check your loan limits because it may not. So when you take on a
Yeah.
listing, you may want to double check on that too. Most of the realtors that I work with know, but some of them are not aware and they're like, oh yeah, what's the problem or why isn't this an FHA or or whatever. So always look at that. That's just a little tip.
That's a good one. And Joe said if you get a bunch of friend requests from Florida, it's his fault.
No, that's fine. The more the merrier. That's fine.
Exactly. I always say the more the merrier. That's a good thing. It's good to have more connections than less. At least with more, you have more resources to tap into, more knowledge. Makes that two heads is better than one all day long because you never know what someone else knows.
Yeah, and there's
So,
nobody that knows everything. I mean, you could be a
exactly.
realtor that's been doing it for 15, 20 years, and you're always going to come up across something, whether it's, farms, maybe you're not familiar with farms or USDA loans, or
Mm-hmm.
it could be, maybe you're not in a base where there's a lot of military people, so it, maybe like for me, I only done a few VA loans, so
Okay.
and they're supposed to be like the easiest ones, so
Yeah,
you,
well,
so you,
we're in a heavy military area. We do have a question I'd like to ask you. I don't know if you're going to be able to answer this one simply, but David said, "What's the best loan if you put $10,000 down?"
well, it's too broad of a question. I mean, it depends. I mean, how much of a house are you looking to buy? How's your credit? Do you own a house already? What type of property are you looking to get? I get those
Yeah, it
questions
sounds
like
like
all the time.
I
It's,
know.
it's,
It sounds like you need to connect with him with a private message, David, because there's
yeah,
a lot of variables involved with that. You also, not just the down payment, you also need to look at, you have to have closing costs. If you don't, you can ask the seller. I mean, there's a lot of variables. You do have to have some money. It's not
there's a
just a
lot
down
of variables.
payment. Yeah, so you really
Yeah.
need to probably, if you really want to get a good answer, you're just going to need to connect with him because there's a lot of information he's going to have or questions he's going to have to ask you.
Like the
Um,
most popular, the most common question I get is like, hey, I'm making 80,000 a year. How much
how
can I
much do I
qualify?
qualify? I even get
And
that one. I'm like, I don't know how to answer that for you.
I don't think anybody can. I mean, I wish I could
Yeah.
answer it. I get more business probably that way, but I
Yeah,
mean, I'd be lying to you if I say $10,000 down or you're making 80,000. I don't know. I mean, you could be in debt up to whatever, and you may not qualify for
exactly.
anything at all.
Maxed out to everything and you won't qualify for anything. But there's just a lot of variables with it, and you've given us a lot of good information. I really like what you said about that's a good thing about the triplexes and the quads, being qualified for FHA with that, and that a percentage of the ones that are rented out helps, because I don't think people realize that too. That's definitely something I want to get into. We don't have a lot of that around the area that I'm in, but
Oh,
I will
really?
be at some point I'm going to be looking out of the area to get into that multifamily, and a lot of those, that's a good tip where the
Yeah.
multifamily, the smaller multifamily, I say, like the four doors, you can still get an FHA loan, and it's a
Yes.
cheaper loan. So,
If for example you're making 30,000 a year,
mhm.
and you with your income alone, you're not going to qualify for what you want to get. Not and you're not taking into account that other unit that's currently being rented out. Now, if the lender adds your income with a portion of that additional income, then you could qualify for the higher loan.
Yeah, it's income. That's
So
just free income.
it is.
So that's why it's really good to look at the multifamily units. They call those house hacks, where if you're flipping a duplex, you live in one of the units, and the other one could be rented out. It pays for itself.
Oh,
It
that makes
says,
the question.
"Bless what's the best credit score to get a loan, and do your credit determine your loan?" Again, another broad question. I'll let you answer that,
Yeah,
expert.
I mean, okay, so the best credit is the highest you can get. I mean, really, I mean, having the highest credit, it will help you with your interest rate. For
What is the
example,
highest credit you can get?
it's like 820. I know I myself, I'm in like in the, or maybe even 840, but the highest that I've seen is like in the
Hmm.
750s,
It's
730s.
it's really an anomaly to be in the 800s.
Yeah, it's an anomaly. Yeah. And I was there for a while, but it fluctuates
Life
so much. Like
happens.
last month, I could have been at a 750, I could be at a 730, and then next month I could be around 800. It varies a lot. But
Yeah.
another tip though, if you guys go on Credit Karma, which everybody seems to go on, and they say,
Yeah.
okay, I read my Credit Karma. It says I have a 640, a 630. I'm above 620 because 620 seems to be the mark for conventional loans.
Mhm.
For FHA too, depending on what you're trying to do. But
Yeah.
and then we run your credit, and we see that it's a little bit different, and a lot of times it tends to be lower. So don't always go by Credit Karma. Credit Karma helps you, it guides you a little bit, and you should just use it as that as a guide. But
I've heard that
there are
it's
different.
usually about 20 points off.
Usually, I see, yeah, 15, 20 points off and lower for the most part. If you have like an American Express, or if you have Bank of America that provides you your free FICO, try to use those. Those tend to be a little bit closer, but Credit Karma is like a Zillow kinda,
20 to
for
30%
realtors.
off.
Yeah, well, usually a lot more, but just use it as a guide. That's all.
Yeah. I would say that you say whatever your score is, and then what did you say? It's lower. So if you're shooting for like a 620, then on Credit Karma you
Mhm.
probably shoot for like what, 640, 650,
640,
and then yeah,
640,
you shoot
650 if
shoot
you want to be on the safe
shoot
side.
for shoot for 30 points higher on Credit Karma, and then you'll actually probably be where you're supposed to be.
Exactly. Exactly. Now, also another tip is if you're shopping around for a mortgage, you have a 30-day window to shop around for a mortgage without it affecting your credit. Now, it will affect your credit the first time, the first hit, but then you have 30 days to, go to your other local credit unions and shop around for the best rate or for the best program out there without affecting your credit.
Yeah.
Now, they're still going to show on your credit that they're checking, but it's not going to lower your credit score. So those are one of the rules or flexibilities that you have if you're shopping around for a mortgage. And you should always find, like I said, find a lender that's going to work with you, or find a lender that might have a program that you're looking for that another lender might not. But
Yeah.
again, like any realtor, you're not going to find a lender that knows it all. a
Mm-hmm.
loan officer that knows it all, and things happen. So just ask as many questions as
Absolutely.
you need, and that's all.
Absolutely. So you had a lot of great information. I appreciate you, Carlito, for coming on here this evening. I know it was tough because you have little kids that you got to get to sleep, but I appreciate all the value that you brought in, your time. So thank you again for joining. We really appreciate it. And then you're a true supporter because you get on and watch too. So I really appreciate that.
Yeah, I mean, I came across, I don't know how, I think I had a friend that was made a comment on one of your videos. So I got curious. And then not just that, but the information too that you were giving. It was fun, it was informative. So I said,
Thank you.
okay, I'm gonna go ahead and participate. And I started adding my little tips, my bits and pieces once in a while to help out, from the lender side.
Well, it's been very valuable, and I'm very excited to have connected with you, and I'm sure we'll get to do a deal together at some point. And I appreciate you joining tonight, and I think we're going to go ahead and wrap it up. We went a little bit longer than usual, but everyone, thank you for jumping on here this evening. And again, if you have any questions that either one of us can help you with, please hit up Carlito. He's on Facebook. How else can they reach you, Carlito?
Well, I can give you my business line because it's just for business. So I know if it rings, it's for that. It's
Okay.
at 786-886-8055. Or you can just hit me up on Facebook too. I have my personal page, and that's fine. People hit me up all the time. Just random people from everywhere, even foreign nationals, because we do foreign national loans too.
Oh, wow.
So,
Well, and
we
put your
Canadians,
info
we
in the
get.
comments so they can catch that in case it went too by too quick.
Okay, I'm also gonna go ahead and notate my work email
Yeah.
um, afterwards so that people can just email me if they have any questions. But yeah, definitely if you're a Canadian, you're watching, or you're Brazilian, which we get a lot of Brazilians, we do those loans as well. So, or even if you don't know, or you're just starting out, with your credit and you don't know what's the best way, if you just need some tips, even if I don't have the answer, I have lots of friends that have, that have been doing this for like three times the time that I've been doing it, that I've been doing it for 20, 30 years, and, or I have underwriters, that I can give them a quick scenario and they'll tell me, oh, okay, this is the best way to go about doing this, or this is the best way to resolving this in order for them to qualify. So,
That's good.
yeah,
That's
definitely.
helpful
I mean, just go ahead
information
and ask the questions.
because,
That's all.
yeah, that's definitely helpful because I know a lot of times if you're not ready right then, that doesn't mean you can't be ready in 6 months or, just give it a little bit of time.
Exactly. Like what I'm doing right now with people that weren't able to qualify earlier this year because how they file their taxes, especially self-employed people or people
Oh,
that work
yeah.
out of commission, people that work out of commissions or get lots of bonuses, and they just don't like paying those taxes, at the end of the year. If you're a contractor, you're getting a 1099 form,
Yeah.
you're just writing off things left and right, and then you can't qualify for a loan. I'm prepping those people now. I'm calling them and telling them, hey, listen, it's half the year. Please remember when you file your taxes next year, you're not writing off, left and right. You want to be
Yeah.
able to qualify for so much. You're gonna end up paying a little bit more in taxes, but at least you're gonna be able to qualify for your mortgage next year.
Exactly. It's a lot because again, I've had where we've looked at taxes and then there were too many employee taxes that were taken away from the income, so they have to take those down. There's just so many things, and I like my job. I think it would be that would not be my forte. So I applaud you guys as loan officers.
Yeah, it's a lot. A lot of people say, well, why does it take 30 days? Why does it take 45 days sometimes? Why does it take even sometimes 60 days to close
Mm-hmm.
on a loan? And each loan is a little bit different, so there's not one loan that's exactly the same as the other one. So, the underwriting process takes a while, you know, verifying information takes a while, with FHAs especially, it may take a little bit longer too because it is FHA. I mean, there are so many variables, so many moving pieces that have to align in order for it to be perfectly, um, clear to close, which I'm sure you're familiar with that term, clear to close,
Oh
as most
yeah, we've
realtors
been
are.
waiting for one. Yeah, we've been waiting for one for Friday, and we are just about there, but it's always going to be last minute. So it's just the way it works. We've got to be on our toes waiting for that final.
Yes, yes, yes. The relationship between a realtor and a loan officer can either be a love or it could be a hate, you know.
Right.
Um, and I get realtors when we're first getting on a loan, I'm like their enemy. It's like, okay, where are we on this? Did you order an appraisal? But then when we get that clear to close, they're like your best friends. They're like, okay, Carlos, you know
Right.
what? Thank you so much.
Thank you.
And we at the table, everybody's happy, everybody's signing, but it's like day and night, day and
Oh,
night. It's
I
the funniest
know.
thing. It's the funniest thing.
Well, I'll tell you what, a realtor's life is like a roller coaster. One minute we're good, the next minute everything is down. It's the end of the world. And then 2 minutes later, we're good to go again. So it's just crazy. I'm sure you
But
have the same, we deal in the
I
same
will,
industry. So,
I will commend you though because realtors, you guys are on the front end. You guys are on the forefront. You guys are
on the
appraisers. You guys are
battle
loan
lines.
officers. You guys are credit experts. To the client, you're everything. You're the
Yeah.
inspector. You are everything. So, and even after they buy the house and they close on the loan, they're still calling you.
Yeah,
So I have to give you your props. Because it's not easy. It's not easy at
that
all.
it's
So
not.
I
We're
couldn't do what you do.
firefighters.
Yeah, you are. You
A
are. I couldn't
mutual
do it.
respect for one another.
Yes, definitely, definitely.
Well, we're going to wrap this up, but thank you again, Carlito. I really appreciate you coming on here, and we will definitely be working a deal in the future.
Will do. Will do. If you have any questions at all, just ask. That's
Thank
what
you,
I'm here
sir.
for.
Thank you so
Thank you.
much. All right, you guys have a good night.